Good morning. It's March the 8th, 2017. Time to kick off another trading day with our customary disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, the selling started last night in Frankfurt, a little bit before London. We were guessing last night that we would have sellers in the overnight session to set up the 10-year auction. The week auction is usually the intermediary auction, so the 5 and the 10-year on paper would be the auctions we'd expect to sell. Where we awakened this morning with Goodluck talking about interest rates are headed back to 3 to 4%, with the Fed tightening rates until the next crisis happens, like a recession, and higher interest rates will kill the carry trade, and it'll really hurt the real estate markets and slow down activity in those areas. Historically, autos and housing have been the start of an expanding, growing economy. And automobiles have been strong since 2009, and housing has never recovered from the bust in 2008. So we've been limping along with the service industry with heavy government subsidies to the public sector and the automobile industry, which was aided by low interest rates and deals. So I want you to, we usually think in terms of London. But sometimes the selling starts in K&L, which would be Frankfurt. And you can see how this high volume area right here held the market. And last night we were 16 to 20 was where we thought the market would go, and we had a high of 16.5. So our sell recommendation of 16 to 20 worked out pretty well. Been straight down. Obviously 123 is a target. Pretty clean break in the market in this 9 to 12 area up here, so 8 to 12 would be resistance. So first sell will be 7 to 11, followed by 15 to 19 for sell 2. The buy side 29 to 1 and 21 to 25. This morning's news: ADP plus 183. Productivity plus 1.4. Unit labor costs plus 1.6. Wholesale trade previously plus 1. I imagine that would probably be pretty close. And crude plus 1.1. Now we had a build of 11.6 in the API, so my guess is that crude's going to build more than 1.1. The news focus will be ADP and then the direction of the E-mini. So as usual, we start off the day with a game plan, and we'll see if it materializes. If it does, if we're on the game, we can let some runners go. We can keep some trades on and get a bigger than normal trade. So why do we go through this exercise? Why do we come in and strategize? Why do we look at the factors? Why do we try to guess the content? And it doesn't mean that we're right, but we've thought about it before, so we're not caught having to wonder about what we should do next. We already know what we're going to do. But if our idea is correct, then we can be much more aggressive on that side of the market, and we can let some of the positions run. Okay, looking at the bond, 48 to 12 is number 1. 15 to 19, sell 1. 23.27, sell 2. 30-year papers, hard to move. 28 to the buck, number 1. 21.25, buy 1. 13.17, buy 2. Last 6 months we haven't been below 147.04. So 147 is a pretty big number. Everything was down a little bit when I came in very early this morning. That's pretty unusual. So we'll see which markets rally today. Strong ADP number should take gold down further. Got this low volume number at 980. We're at 12, so first buy will be 9 to 11. We'll pick up this low volume number right there. Got a high volume area down here at 3 to 5, so we'll make 4 to 6. Buy 2. Then stops under 1200. I know the stops are there. On the sell side, 14 to 16. 18 to 20. Okay, we have a strong ADP number. It should impact the euro. Take it a little bit lower. It is pointed down. If the United States raises, the Fed raises interest rates next week on the 15th, it should take the euro lower. That's expected. It's probably built into the market, but everything is still pointing to lower prices. A B. Which side do you want to trade from? A B. So top of value is 67, so 65 to 75, sell 1. 90 to the buck, sell 2. On the buy side, we're at support at 50, so 40 to 50, buy 1. And then 25 will be buy 2. Stops below 105, that's where I think we're headed. We were there 5 trading days ago, 4 days ago. Crude oil, huge build last night. And, you know, some of the people are wondering why their energy spreads aren't working. Long April, long May gasoline. And we're becoming an exporter of gasoline, and the demand domestically for gasoline has fallen about 6% in the United States. So where do we sell it? Well, we sell it to Central America. We sell it to South America. Some of it actually goes to China. So the long-term historical deal where we're buying and importing crude oil from overseas in ever-increasing amounts, that game is over. The shale oil production is climbing once again. It's going to be over 9 million barrels pretty quickly if it's not there already. And so the economics and the dynamics have changed quite a bit. Okay, support right here is at 52.50, so I think we're going below that. Get stops below 52.50, so buy 1 is 52.25. 52.50. Buy 2 will be 51.75. 52. On the sell side, 52.75. 53. Sell 1. And 53 1/4. 53.50. Sell 2. Back to the brush fires. Normally, in the fall, in the grasslands east of here, the Flint Hills, and that if that got lit up and it took off, that could be a 100-mile fire, 100 miles long and 50, 60 miles across. But in the fall, they burn the grass, so they get new growth in the spring to background feeder cattle. So the fire hazard east of us isn't as great as it is west of us. Okay, resistance. Last rotate up yesterday stopped at 70, so 69 to 70 is where resistance is. We've got a P right now, so no reason not to think they're going to get stops above 68. So first sell 69.71, then 74.76. If the ADP number comes in as forecast, 183 or greater, it would be supportive for indexes. Buy 1, 60 to 62. Picking up this area right there. And 55, 57 for buy 2. Stops below 50. That would be a 50-point pullback. So 50 to 70 points is what we expect in a bull market. Everybody, again, the market's come back, so we see more negative articles than positive. So I think those that get short are on a pretty quick fuse. They're not going to hang around for long if the market comes back in their face. It's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.